So our next panel session is going to be on the discussion of the future of transfer pricing documentation. So let me just introduce our panel, and then we'll take it away. First, sitting right next to me here, I'd like to introduce the panel moderator, Andrew Weaver. Andrew has over 8 years of transfer pricing experience, currently serves as Senior Solution Consultant for ONESOURCE Transfer Pricing. Joining Andrew is Sunny Williams on the far end over there, Tax Director for Agilent Technologies. As the leader of Agilent's transfer pricing team, she is responsible for transfer pricing strategy, planning, policy, compliance, process management, audit defense, APAs, and business advice. I don't know how you have a personal life if you have. You've met SAUMYANIL Deb, who's now moved from moderator to sitting in the hot seat, so give him a hard time.
Yeah, of course.
So, SAUMYANIL is the group leader of our ONESOURCE Transfer Pricing Services group. He's also a PhD and has vast experience in providing transfer pricing consulting advice to clients from diverse range of industries, including healthcare, pharmaceutical, financial services, industrial sectors, and information service providers. Sitting next to SAUMYANIL in the middle is TRACEY, our Senior Solution Consultant for ONESOURCE Operational Transfer Pricing. She works closely with clients to develop the appropriate project plans and assist in implementations of new processes and systems. So with that, I'll turn it over to Andrew to talk about the future of transfer pricing documentation.
All right, thanks, Joe. Just going to grab the clicker here. And first of all, I'd like to thank the panel for joining me today. The topic of today's session is going to be the future of transfer pricing documentation, which is something that I'm sure you all are very familiar with. It's become kind of a standard practice, to do transfer pricing. Just an overview of the agenda. First, we're going to kind of drill down a little bit on BEPS action point number 13. BEPS is really becoming a four-letter word in every bit of its understanding. So we'll take a little bit of a deep dive into 13, which relates specifically to transfer pricing documentation and the proposed guidance within that action point. Then we'll talk about documentation trends and challenges. A lot of times when you typically think about transfer pricing documentation, you're thinking about your compliance report from cover to cover. But we're starting to see that documentation goes beyond just a report and goes more on the operational side and the financials side of your transfer pricing, kind of proving out what you booked was indeed the right answer. We'll talk about business applications and implications, as well as approaches to leverage technology solutions to manage transfer pricing documentation. As the requirements grow and as the amount of information that you need to compile and present is growing, there's opportunities to take some of the burden away by accessing different types of technology. And finally, we'll kind of wrap up with some practical considerations and benefits, through the use of technology and working with providers to approach, the ever-evolving transfer pricing documentation landscape. So we kind of start with BEPS action item number 13. And there's kind of a big difference between what was originally in the 1995 OECD guidelines and what's in the proposed guidance. Historically, the concept of master file is not unique to this proposed revision of the OECD guidelines. It really dates back to 2006 and the European Union guidance on transfer pricing documentation. And what they propose is this two-tiered approach. The first tier being the master file, which is really kind of that overarching general information file that provides kind of a blueprint on the multinational enterprise as a whole. Just to kind of give you a taste of what the company looks like on a high level. The local file in the second tier is really where that's kind of what you would consider your standard transfer pricing documentation on a country basis that you're performing today. But within the local file, it's really where you drill down, analyze the transaction specifically, perform your benchmarks, and document the entities required and provide really that context in order to meet the requirements of that particular jurisdiction. Now, as the OECD is proposing to include this two-tiered approach in addition to the country-by-country template, which we'll get into in a little bit, there are certain implications to that. Number one, the sharing of information. So sensitive information that previously may not have been shared across jurisdictions is now kind of going to be coming up. So it kind of places a lot of focus on you as a tax professional to make sure that you have control and transparency into that information, because a lot of it will be sensitive. But again, kind of the overall idea is to help governments and authorities with risk assessment and just to kind of have that transparency as they approach just a review of a multinational's enterprise as a whole. So, SAUMYANIL is kind of, he's still warmed up. His pitch count's getting up there, but because he's his specialty is in transfer pricing services. He's had a unique experience with just the historical aspect of transfer pricing documentation and the introduction of master file and local country file. So, SAUMYANIL, would you mind maybe just providing some feedback and an overview of the historical guidance and what is being proposed in that
Absolutely,
section?
sure, Andrew. First of all, I should apologize to everyone that you are seeing me too much on the stage. I promise that you will not see me on the stage after this session during the day. Now, going back, going back to this master file and country by country reporting, I would like to take a step back and tie that up with the BEPS, because it directly relates to BEPS. And but in the morning session, Brian talked about one fictitious example, and I would like to go back to that example and how that relates to this overall master file, country by country reporting, and how transfer pricing is evolving. Now, BEPS is base erosion and profit shifting, as you all know, and in Brian's example, as you saw, that that Chinese company which was providing raw materials, but the company is mainly paying taxes in Ireland. Why? That we can really tie with Ken's comment in our earlier panel, that what the value is creating, what the value is being created, and that's where the intangibles comes into play. The main talking point of BEPS, the main rationale behind this BEPS is intangibles. It's when there are buy-sell transactions, it's very easy. That's cost plus. Now, there can be some arguments over the markup, but it's very easy. You can say this, buy-sell. And for services, there can be some ambiguity, but main ambiguity in transfer pricing is intangibles. Later on, we have a session on intangibles. But so where the value is being created, that's where most of the taxes sit in, and that's where the companies can park in their profits, and that's where those tax havens, whether it's Irish tax haven or it's Cayman Island, and that's where you hear lots of unique terminologies like Dutch sandwiches and Dutch-Irish double sandwiches. So there are lots of different terminologies economists, lawyers came up with. One of them is, of course, BEPS. It's a catchy terminology. But that's where the origin of master file and country-by-country reporting. And the main thought process of master file is that when the Chinese tax authority is looking at your documentation, they're only looking into the Chinese part of the transaction, or maybe the other part, but they are not looking into what documentation you are giving to the other tax authority. So master file wants to implement more transparency. Whether it's right or wrong, whether it's scary or not, that's a different question. But that's the intention of the OECD, more transparency. So they would like to see a master file which encompasses the full picture of your business. And that can be scary, that what you're doing in the other part of the world, you have to show to some other very aggressive tax authorities. And that's where the question of aggregation versus segregation comes into play. That is, only segregated picture or segregated financials are not going to be useful anymore if this is implemented as it is. Aggregation concept comes into play. And that's where master file, the requirement is to give the fuller picture of the business, to talk about what you are doing, more transparency. And from there, if you go to the local country file, that is the tier 2, this two-tier approach. Local country file is pretty much like your current documentation. country-specific documentation. There are more rigorous requirements, but pretty much like the same story. So basically the first one is the master file. You have to show the bigger picture to all the tax authorities, and then you have to prepare local file that is country-specific, country-by-country documentation for each of the tax authorities. And that's where the segregation comes into play, and the first where the master file, that aggregation comes into play. And this is the overall picture, and that's why intangibles and understanding, and lots of companies are migrating their IPs now. So what is the main rationale? Of course, streamlining the business, effective tax rate, but I'm not necessarily saying that it's all of them are shifting profit, absolutely not, but because you have to be efficient in doing business, and that's why you are doing it. But tax authorities might see this differently. So you have to create an economic substance, real business case for doing what you're doing, and you have to be ready that all the tax authorities will see your documentation and there will be more transparency.
Yeah, no, and I think that's a good point. And from my perspective, one of the key takeaways here is, if you look back at the OECD guidelines, or as they exist today, there is no specific layout of the type of information that should be provided for documentation. But now we're starting to see kind of a more focused guidance and list on the types of files that you should compose, the types of intercompany agreements that you should have in place. And while the OECD still, really lets the documentation requirements fall on the local countries themselves, those local jurisdictions, we're seeing kind of this overall trend towards, common, typical information that should be required. So, I mean, again, in most cases, countries and companies are adhering to local rules, but again, you're kind of seeing it on a high level. And now, if you think about it as more of like a trickle down, using the OECD as kind of your overarching theme and overall guidance, now local rules could potentially become even more stringent now that they see, maybe there wasn't a piece of sensitive information they were requiring before to be included in transfer pricing documentation. So, I mean, that's a point of that's a contentious point, but probably the most contentious point of what the OECD is proposing in Action 13 is this country-by-country template. And as Brian touched on in the beginning, they've cut this down to about 7 columns. So this was kind of an older version. But you can see the amount of information that is being required. And it's being required on a country aggregate basis, not only on a legal entity basis. So this is where kind of, outside of your typical documentation requirements for reporting, from a reporting standpoint, comes into play, but really the operational side of transfer pricing and having control and transparency and insight into your systems comes into play, because the type of information and the type of consolidations that you need to do to produce the inputs or the outputs required to fill out this type of template, an operational tool is kind of where you can kind of achieve some help.
Andrew, I think that's a good point. Is that when you look at what the trend is with country by country, and what someone mentioned in terms of the fear or the risk of now all of a sudden presenting all of this information that you've never given to a jurisdiction, companies need to really sort of take that step back and say, well, do we have that transparency internally? How can we possibly put that together without technology? I mean, realistically, you would need a team of probably everybody in this room, if you think about it from a manual perspective, and spending 5 months and 582 Excel spreadsheets to realistically have the transparency. Let's face it, that's not realistic for any of our organizations. I would suspect that if you asked for a team this large, any of you, I don't think that would be met with any kind of positive response. And that's really where technology can help companies, because by providing the tools to bring together information and then layer on those transfer pricing specific rules. Because let's face it, extracting information out of your books and records, while yeah, that's country by country, you still have to be able to then tie that information to your individual segments, and then tie that down to product level information. So whether you're talking about it, yes, it's summarized on a country basis, a company still needs that confidence that they can drill into the ultimate results of how that was reported. And that's really where I think technology is going to play a huge part in the future of transfer pricing, not just from producing documentation, but really empowering organizations with the tools to be able to effectively and efficiently not spend 5 months on Excel spreadsheets. Because I don't know about you, but who here entered tax because they love Excel? That's pretty much it. We all use Excel and come to love Excel because we have to, but that's really not why we became transfer pricing professionals. It's a tool that we've been forced to use because there really wasn't anything else out there. And so that's where there's just been a change that is occurring in technology of being able to have the right tools in place, whether it's embedded in SAP or other fantastic vendors that might have a product. Looking at how you're going to embrace technology as an organization, I think is really the trend that the companies are taking.
Yeah. And that really extends beyond BEPS. It extends to the transfer pricing industry as a whole in any country. And maybe the way that we've typically used the word documentation, maybe the definition needs to be broadened a little bit, because it isn't just spitting out a report, 6662, or just coming up with some type of document cover to cover that has all of the sections that you need and all of the information and benchmarking results you need. Now there's this other element of documentation that goes internally into your company, into your financial systems, that becomes almost as important as having the report in your hands to give to a tax authority. So Sunny, I know at Agilent, you've taken some approaches on the operational side of transfer pricing. Would you be able to just share a little bit about kind of the history and where you started and kind of how you started to approach an operational aspect to your transfer pricing?
Absolutely. So it was back in 2011, Agilent had made an investment to a functional analysis so that it would include, we obviously already did 6662, but OECD and local reports. Prior to this, for US, we simply did exception-based reports against a full report that was issued back in 2004. When we were faced with local audits, we would have to basically create the transfer pricing documentation, leveraging from what we had, so we were much more in a reactive mode. So our first year, we literally had a simple template, asked the controllers to fill out their P&L by function, and it was pretty much a disaster from the perspectives. They needed guidance. They had never done this before. We got odd results back, and what came back was not a standardized product. So what we did is we partnered with our controllership organization, and we now today have a standard country profile template and a standardized Excel-based template. Our country profile has the standard for each legal entity in that country, what its business operations are, its intercompany transactions, the tested transaction economic analysis. That is now has to be updated because, again, we made the investment to create more of a standard product. Our Excel-based template, we pulled data from multiple sources because, unfortunately, we have 2 ERP systems. And but what we do is we do the work for the controllers to start them off with a pre-populated template that takes their statutory financial statements that have completed the audit cycle, and it slices and dices it by function, whereby they are to the point they just need to review the results, determine the accuracy. We test the range, and then they review and sign off on that. We use a data repository tool to operationalize our process that basically starts in January and it runs through May. That's where we have data control. We have sign-off by each controller. And then the next step is we compile all the results. We prepare our US 6662. We have an OECD study. We do follow the master file approach, and we do put a lot of detail in our OECD study to include our business operations, industry analysis, all of our, in our company transactions, we have flow charts that identify each flow. And then, like I said, we put the results in for all of our different service providers. We then produce local country documentation and reports so that then in our data repository tool, we have that final report, all the intercompany agreements, so that when we are notified of an audit, the controller can simply go and access that. And since we have put that process in place, we've had several audit requests that we've been able to simply provide what we had put in place. So.
Yeah.
I had a question.
Yeah.
But this is only for your annual process. So realistically, you couldn't do this on a monthly or quarterly basis, have the controllers be able to, in a meaningful way, be able to do the same level of detail and analysis.
Absolutely. I mean, that is the limitation to what we have today without a technology tool. I mean, we are certainly one of those companies that live off of Access database and Excel schedules, and so unfortunately we don't have the benefit of reviewing the results proactively. We do have the results on a US GAAP basis, typically as you go. We have a service billings, and we have to do a 1-month lag because of the length of time that it takes to gather the data to do that service billing. You can reduce the frequency of those billings, you can reduce your drivers, but at the end of the day, it still takes an amount of time to process that, as opposed to, you know, an end-to-end solution.
Do you think do you think that any changes will be made to the whole process if the master file and country by country reporting is implemented?
I don't know. I will say that our company measures IT projects and solutions on an individual ROIC basis, and my hope is that we could be proactive and implement and get approval prior to all what's coming down, as opposed to having a bad thing happen that would then cause us to react.
I think that's really where the last session about building a business case, so make sure you guys all stay for that. That'll help.
Yeah, and Sunny, you really provided a nice picture of, you know, just kind of your overall process. One of the things that you mentioned was, you know, getting sign-off and more of the kind of, you know, resource management in terms of personnel that go into gathering information, sending information requests. You know, that's a whole element to the larger project, not just the underlying data or the deliverable, but kind of the managing of the people and the tasks and the sign-offs in the middle. And I want to come back to that, but SAUMYANIL, when we talk about approaches to meeting the requirements of, you know, current documentation as well as the prospective changes to documentation, you know, one approach that a lot of taxpayers use, whether, you know, fully or partially, is to use their, you know, external providers and their consultants or their advisors, and you know, these are the experts, because a lot of times, you know, companies don't have the resources to build a tremendous staff of transfer pricing professionals. But one of the things that we see as time evolves and the amount of information and data that you need to collect and present in your documentation increases, and rules increase, you know, the resources that you may have internally that you would devote to a provider, maybe they're shrinking, and there's ways to maybe build some efficiency or find some efficiencies. But in terms of just working with your provider to help deal with master file and local country documentation, you know, could you speak a little bit just about how using your provider is one approach, and how even, you know, using a provider with some technological aspects to it, tools involved in that process, you know, how have your experiences been there?
Absolutely, and it's a very timely point, because more actions as we see from the OECD, more worried taxpayers get. They think that this master file, and rightfully so, that compliance cost is increasing pretty steeply for all the taxpayers around the globe, in the US and in other countries as well. So as they get scared, of course, we can see a tendency to use experts, rightfully, to have their reports prepared. However, there are different aspects, different tiers in utilizing technology in-house and maybe combining with using experts or not using the experts. Number one is, of course, getting your house in order. How to do that? That is the whole throughout the year process, and that's where Operation Transfer Pricing comes into play. That is, you have to have your house in order so that there are no surprises at the end of the year. That is the first step. The second step is compliance. Once your house is in order, then your compliance burden, as a matter of fact, reduces. And when you start automating the process of getting the house in order and then compliance, the automation of compliance becomes easier as well. And that can be done. And effectively, as a matter of fact, many providers do it. And of course, we do it pretty effectively as well. That is combining experts with the automation. And that's where you can have your studies prepared, and then you can update your studies annually going forward. But you have to basically follow the rigorous first step and rigorous second step. And you have to have all the backup files and everything in case you get audited. And one other thing I would like to add on is basically some taxpayers, sometimes some multinationals, sometimes have tendency to produce one report to one tax authority and to other perspective completely different report, maybe using different PLI or different methodology to defend their same transaction, but in different countries to defend different perspectives. If master file is going to be implemented, then that you can forget about that because of transparency and because of sharing of knowledge and sharing of information between tax authorities. So that's not going to be, hopefully, the practice of any multinational. That can cause a huge problem. And you can solve that, as a matter of fact, by this two-tier approach of what we propose. That is, first tier is Operation Transfer Pricing, getting your house in order, and second tier, compliance documentation.
And so, I mean, just in general, what has the reaction been from your clients with all of the proposed changes within OECD BEPS and Action 13? Do a large number of your clients have master file in place, and are they starting to think about it? And what are some of the questions or concerns from their standpoint?
Well, as I have said before, that is, more rules would cause more onerous compliance process. So, of course, multinationals are not extremely happy. They're not ecstatic about new rules. But they also understand that this is the rule of the game. So they have to play by the rule. And to answer your question about master file, some of our clients do have master file, but majority of them don't. And I think it is the case for all multinationals. Very few of them have master files, mainly bigger multinationals, and majority of the multinationals don't have. Now, whether they're thinking about preparing it, yes, if this rule is being implemented. So they're kind of like in a wait and watch mode. So they would like to wait and watch and how OECD moves, how G20 country moves, and how it trickles down to other countries, and then they would move. Because overall, I think you would agree, Andrew and Sunny and Tracy, that transfer pricing has been historically been very much reactive. So of course, it's better to be proactive than reactive, but still, people are in reactive mode. So unfortunately, majority multinationals are still in reactive mode. They would like to wait and watch. So that's the current shape of the world now.
Yeah. Yeah, no, I think it's, I think that is a good point as well. And, as we know, this is proposed guidance number one. Number two, these are expected deadlines, but, if you followed previous OECD and other tax authority types of rollouts of new regulation or new commentary, those deadlines don't always get met. So regardless of what the end result will be or the end guidance or finalized guidance will be, there are still overall trends that we can look to. And that is, again, having more control over your information, having that transparency, and really being able to tell a consistent story across all jurisdictions. Because we're entering a phase where tax authorities are collaborating or at least sharing information, it really becomes paramount to have that consistent story so you don't face certain risks such as double taxation, et cetera. So when thinking about how technology can be leveraged to manage current documentation requirements and where the documentation component of transfer pricing is headed, we kind of think about it in three kind of buckets or categories. One is the operational side of transfer pricing, which TRACEY has touched upon a little bit so far. The second is workflow, and that's kind of a general term, but it involves kind of that process management. Because in all likelihood, and this relates to current documentation practices, you're dealing with multiple individuals who may be sitting in different countries around the world. But again, managing kind of the communication side of collecting information, of getting buy-in, becomes somewhat of a challenge, especially with time zone differences, with traditional use of Outlook. So I mean that's really a kind of an overarching theme that kind of touches the entire landscape of transfer pricing. Having that process and control in place is going to reduce the burden of some of those administrative elements of transfer pricing documentation. And then kind of the third bucket is documentation and benchmarking. As we see more countries laying out documentation requirements, is one of the graphics that Brian showed early on, just the number of countries has been rapidly increasing. There's also been a focus on local comparable data. So the ability to have kind of at your fingertips a database that has kind of global coverage, both on a private data and public data perspective, that allows you to save time, going from different data sources, different databases. These are some of the challenges and some of the hiccups that can really burden your process. But TRACEY, when we talk about operational and kind of the technological advantages to using operational, both from the expected proposed revisions to Chapter 5 in the OECD, but also just for your company as a whole. I mean, where else can you find advantages by having this control and having this oversight?
Well, certainly from a process management, being able to be proactive, whether it's minimizing year-end true-ups on a bulk basis, but when you're talking about the transfer of tangible goods, the fact is that proactively changing those prices where you're not hitting the appropriate margins, that's where companies are identifying savings on a customs basis. Because if at the end of the year you're making a large adjustment to the profitability of that entity, when if you adjust on the other side, just adjusted the prices downward to actually be arm's length, that could save tens of millions of dollars. And we had one client that they had in one region had identified, they calculated internally $10 million. That was a conservative estimate for their tangible goods savings for customs. And that they knew that using a tool to proactively change those prices and eliminate those year-end true-ups was going to be a massive difference. And that obviously then has implications to improving profitability, effective tax rate. Eliminating double taxation is also a huge area. And so having a technology tool so that you're not running into a process where it's after year end because it takes so long to do the process, and you identify that you're out of, you're not going to be able to find comparables that are going to really, you're going to fit into. Now you have to make that decision. Is it a country that allows you to make post-year-end adjustments? If you're in Russia, you're out of luck, and so now you're talking about double taxation, that's not captured. And so that's really where, by sort of that shift from, as you say, transfer pricing has always been reactive to a proactive approach, it really has transformed organizations and given them these other benefits that are ancillary to transfer pricing, but really are, kind of go hand in hand.
Yeah, yeah, and it, Sunny, I mean, you're within your company, you've certainly taken this approach, and it sounds like you've seen, benefits already. But kind of tying it back to kind of the workflow and the process management side of your operational approach to transfer pricing, can you kind of drill down a little bit on some of the challenges that you face with just collecting information, dealing with multiple individuals, maybe across different jurisdictions, how your current tools to manage that help, and how maybe, prospectively, where you think maybe there's an opportunity to, build some more efficiencies into the workflow aspect of transfer pricing?
Sure. So, I mean, we have a data repository tool that has database functions, and that's the tool we use to manage our process. We use email as our form of communication. We have, Agilent has a large operation in India, and we actually have folks who support transfer pricing, and they support this process. So they are the, we craft the communication to all of our different controllers. We provide the guidance to our support staff in India. They execute on behalf of us, but it takes a lot to simply coordinate the outbound emails, who has responded, who hasn't. We check within the database tool that we have. If controllers have completed items, we have to run reports out of that database system. You have to follow up with those individuals. So it is still, and like I said, we're using the tools that we have today at our disposal, but it is still a somewhat manual process.
Yeah. Yeah, no, I mean, it's probably one of the trickier or trickiest elements to this, for some of the challenges and the components that you lay out. But certainly it is a vital, plays a vital role in the process, and certainly if you are able to, have some, efficiencies and ways to automate some of these things, that only allows you to free up some time to do some other things, such as maybe more strategic type functions, of your day-to-day. Now, TRACEY, the idea and the concept of operational transfer pricing is fantastic. If everyone could snap their fingers and have kind of this type of technology and this internal system in place, it'd be great. It's like an ideal scenario, but sometimes it's hard to envision where you are currently to that end goal or that ideal. What are based on your experience and some of the the issues that you've worked through with with current clients and other folks, like what are some steps to approach implementation, just kind of at the early stage, and what are some of the things you need to do to even get to the point of looking into a solution?
Well, that's a great question. And a lot of companies, you're right, I mean, some of them don't have any idea sort of where they're at today. And so certainly taking stock of where you're at, what, do you even know what all your intercompany transactions are? But once you have at least a general picture, sometimes people look at a project and they think, well, I have 20 different services and I have 150 entities. I can't possibly think about implementing something, a technology tool. And it's not, it's not like implementing SAP where you have to do huge chunks at once. It really is about, managing in small, snackable amounts. I mean, it's, the whole how do you eat an elephant? It's one bite at a time. And that's really what operational transfer pricing, I think, is that you're never going to try and do everything at once. You're going to start with, maybe the trunk, and then, maybe the toenails. Yeah. But it's really just about little pieces and just attacking it, because eventually you'll get it all done, but prioritizing where those things are. Is it tangible goods? Is it services? And then, because as you do that, as you implement and as you start off with those little projects or phases, then what happens is that other areas of the organization start seeing the benefits, and they're saying, hey, then everybody wants to jump on board and be more helpful. Plus, you see other groups outside of finance and transfer pricing who are the direct beneficiaries. They start seeing, because now they have better visibility to the results, because it has wider implications across the business. Inside Thomson-Reuters, we were actually, I was showing the software and having a conversation with our head of product management. And when I was just talking, it was a general demonstration. He goes, you mean we could actually get a P&L by product line? So I could actually start to think about what the costs are from, on a product by product basis of what, the help desk costs are. He's like, that's actually kind of cool. He has nothing to do with transfer pricing. But the fact is that he understands that from a segmented basis, what the benefits are to him. And that's the kind of things that we hear. Those are some of the stories that we hear from a lot of our clients about other groups that have nothing to do with transfer pricing and the benefits that a tool, any kind of tool like this can really give.
Yeah, and I want to ask both you and SAUMYANIL, when we talk about the what versus the how, and as it relates to documentation, having the system in place, having the report in place, and the determination of a segmented income statement or balance sheet. How do you see kind of the evolution of showing some type of documentation of the what from an operational standpoint, even as would that be some type of report or just a simple walkthrough? How important do you think some type of more formal documentation for the operational side, will enter into the future, of this conversation?
Well, I'm going to start. I like to talk.
Yeah, of course. Keep talking.
But the fact is that when you talk about country by country, it really is. There's two sides to that coin. There's the financial aspect, and then there's the traditional documentation. But you can't really do one without the other, and that's really, I think, this is that it really is a shift beyond that sort of arm's length. Is that it's beyond traditional documentation, that you really have to have a something in place that's going to help you achieve both aspects, and transparency and confidence in both aspects. It's not enough just having confidence that you have the right comparables, because if you can't provide the detail, Ken mentioned in your earlier session that that making changes to product pricing after the year, if you didn't do them earlier, well, that's too bad. Mm-hmm. Well, that's exactly it. Is that you need to actually have them. If they're not hand in hand, and the operational aspect is not just a once-a-year thing, it really has to go throughout the year so that you have that confidence when the IRS comes back. You can say, we actually implemented what we said we're going to do. This is the proof. We can show you what month do you want to see. We can give you that month. Do you want to see what transaction? And having the ability to access it without having to create it, which is where we hear companies are trying to do today, is they get an audit request and all of a sudden they're trying to create the financial aspect and everyone's left. Right. I think that's really where the change is going to come about.
I agree. And well, first of all, here we are talking about, in your question, is documentation of how you came up with your segment, for example, segmented financials from your overall GL, rather than documentation for how we see documentation report. Now, as a matter of fact, when we are talking about future of documentation, this documentation, that is your backup work papers, should already be there. So if you don't have it, and if you think that you will have it maybe after OECD come up with some requirements, or IRS will scold at you maybe, then you'll have that. That will be too reactive. You should already have this documentation. Mm-hmm. Yeah. That's how I feel.
Yeah. No, and I think one of the themes here is being proactive, versus reactive. And while we're kind of all in a wait and see mode with the final regulations and guidance from from the OECD, again, we just bring it back to the overall trend that the fact of the matter is there's more eyes on transfer pricing from your typical sources like governments, tax authorities, tax directors, CFOs, to media. I mean, a couple years ago there was that issue with Starbucks in the UK where they voluntarily paid taxes that they didn't actually have to pay. I mean, that's like revolutionary, right? Who would actually do that?
Well,
but
that talks about politics surrounding transfer pricing.
Yeah, right. But just going back to the theme of documentation and having processes in place and just empowering yourself as an individual, as a tax professional, to have that visibility. You're really setting yourself up to be in a better position for whatever is going to come down the line. Better to be proactive, be prepared, than underprepared and scrambling. That's only going to, put more gray hair on your head or make your hair fall out and, just lose sleep, which I'm sure you're all doing with, every time the word BEPS is mentioned, as it is. Kind of in closing, we kind of think about some considerations and benefits to having, some processes in place and paying a little bit more attention to control, transparency, and also technology tools. We have a couple minutes left, so I don't want to spend too much time here, but I thought maybe we could open it up if there were any questions in the audience with the final couple minutes.
I had a question for you, actually. You, if I understood your model correctly, you involve non-transfer pricing and non-tax people in the gathering
Yes.
of the information for your templates.
Yes.
Could you describe what the education process was for them? Because I'm assuming that a lot of them have no idea what transfer pricing is prior to their involvement in this process. So could you describe maybe some of the, challenges you had and some of the experiences you had in educating non-transfer pricing people about how important this is and why they basically need to cooperate with you?
Sure. So actually, our international controllers are very educated on our transfer pricing model. We do that education with them.
And this was prior to, the innovations that you had?
So yeah, so exactly, that's prior to that. So again, like I said, they know our transfer pricing model and the results that are expected within their country. When it came to what we put into place, there's a lot of judgment that needs to be done. Whether, how do you allocate OPEX if you're a CM and you're also a distributor. Unfortunately, in our model, we don't have separate legal entities for every function. We could have a legal entity that could be a distributor and they could also be a CM. So what we did is when we partnered with our controllership team to create this template, a lot of questions surfaced through that process, and we as the core team made decisions of how to apply the rules to the pre-populated template. But we also went out, we had a representative from Asia Pac as well as EMEA, so that they would, as the questions surfaced, they would consult with their constituency, they would come back and we would have conversations and discussions and make the decision as a team. So that way we're having consistency through the method of the pre-populated template, and then the results are coming in of what we expect, and if they're not, we're all looking at the same template and data. So that's a little background. Mm-hmm.
Okay, I think we're actually out of time, so I want to thank you for the question and thank the panel for providing this really great feedback and content.
It's a pleasure. Thank you.